What's up guys and welcome to Wall Street Millennial. On this channel, we cover all things stocks and investing. In this video, we're going to go over the greatest gains and losses on the Wallstreetbets forum from the past week so we can learn from other people's experiences. Before we get into the video, we'd like to thank our channel members who get access to these non-time sensitive videos one day in advance. They also get to vote on some of our video topics. First up, we have user bballhoops365. This Robinhood user made the unfortunate mistake of buying into AMC calls right when the calls were at their highest prices. He bought 4 contracts for an average cost of $13.30 per option. If you haven't been living under a rock, you know that AMC stock has absolutely mooned in the past week, possibly even more so than GameStop did in the original late January short squeeze. It now trades above $50 a share, compared to about $2 a share as recently as 6 months ago. Countless Wallstreetbets followers have made big money on the run-up in AMC, largely at the expense of short sellers. However, it is possible to buy at the top and lose money, especially if you buy when the options premiums are inflated. This trader did exactly that. With a break-even price of $86.30 and an average cost of $13.30, we can calculate that the strike price of his calls is $73. Despite AMC's epic rise to $60 a share at one point last week, it was not enough to push his calls into moneyness by Friday, June 4th, which was the expiry date. This led to an 80% loss at the time the screenshot was posted. If he had held till expiry, he would have lost the remaining 20% as the options expired worthless on Friday. Such a trading failure can only be ridiculed by the comments section. User Vixie48 implies that the theta decay that inherently plagues any options value is what caused the decline to zero. Cluttered Smoke says that because of massive theta decay, it is not a good idea to buy options during volatility. Another commenter says that if you do buy options on stocks with high volatility like AMC, then you have to make sure that you get out of the position very quickly. Better luck next time on your future trades. Next up we have user Mad Mardigan, who is holding the bag on Clover stock. Clover Health is one of Chamath Palihapitiya's SPACs from back in the glory day of SPACs, and it spiked in price pretty much right out the gate, nearly doubling in price late in December. However, issues with the company, including a bombshell report by WSM Research against Clover, sent the stock plummeting back down to below $7 a share at one point, more than 30% below the original SPAC price. It has been slowly bleeding out for close to half a year now. That's bad news for this trader, who owns what was originally more than $100,000 worth of Clover stock. He bought it for a total cost basis of about $12 a share. At the time of the screenshot, Clover was trading at around the $8 range, bringing his unrealized losses to 33%, or $34,500. However, after an apparent mini short squeeze and renewed interest from retail investors, the stock seems to have gotten its mojo back. It now trades within shouting distance of $12 a share, which, if the OP had held those shares, would mean that he no longer is in the red for the investment. With the diamond hand starting to pay off, many commenters are encouraging of the OP's position. User Admirable Medium 425 urges the OP to hold the line and that the rest of the Clover Health gang will get the stock price up sooner or later. Others exchange rallying cries like the days of GameStop. It's looking like Clover Health has a chance of becoming the next Wallstreetbets hype stock. Next we have a trader who has been on the right side of the trade for both GameStop and AMC. He claims to have made $50,000 on both GameStop back in January and AMC recently. Now he is all in on Clover Health and already made significant gains on it. He says that he moved into Clover Health last Friday and is enjoying the move in Clover stock since then. He is probably referring to the 33% one-day gain in Clover that happened on Monday. Luckily for the OP, he was already all in on Clover for $160,000 of stock. At the time of the screenshot, Clover was at $10.90 a share, bringing his gains to $32,000, mostly in just one day. However, with Clover now at $12 a share, his gains should be more like $40,000 by now. The OP thinks that Clover might be a better long-term hold compared to AMC at the current lofty levels of $50 plus. He hopes that the ape community can bring to Clover what it did for GameStop and AMC, and so far it seems to be. Clover seems to be interesting some newer members of the Wallstreetbets community. User Getterly says that he aspires to one day make enough gains to have a six-figure portfolio like the OP. The OP then responds that he only had a small amount until the beginning of this year when he hit the gold mine with GameStop and AMC. His advice is to just watch for squeeze potential. In his words, Wallstreetbets is as much a blessing for trading ideas and discussion as the hedge fund companies are a curse for us retail traders. Congratulations on your gains. Next, we have an insane gain on the ongoing AMC short squeeze. User PlentyLoad1589 has made 1,283% returns on a $1,600 investment in AMC. That adds up to 20,500 big ones in gains. 11,000 of those were from one day alone. You already know that AMC has been rewarding shareholders over the past several weeks, 5xing in price in the past couple weeks alone. On Wednesday, June 2nd, the stock doubled in one day alone, which is where most of the OP's dollar gains are from. What's more impressive is that the OP did not even employ options to reach these gains. He has been holding the stock since late January and diamond handsing it since then, which is how he was able to stake it out over the course of February, March, April, and most of May without losing all of his capital to theta decay. The impressive thing is how he was able to maintain diamond hands for all of this time, even after the original short squeeze ended. Commenter Perfect Ground 7178 congratulates the gain, but questions whether a $1,600 initial investment really counts as a true YOLO. Depending on your financial position, it's safe to say that $1,600 can definitely be counted as a YOLO. His massive 4-figure percentage gains, as well as his 4-month-long diamond hands, should leave us in awe of his trading fortitude and discipline. Turning a relatively small amount of money compared to other YOLOs we've seen on Wallstreetbets into more than $20,000, which is a comparatively large amount of money, is extremely impressive. Congratulations on your gains. Wallstreetbets user Jimmy Forshoes has had a pretty depressing past few months. His portfolio has declined a whopping 92%, or $20,877 over the past 3 months. Most of his losses came from options plays on meme stocks, including rocket companies, Microvision, Tesla, and GameStop. He originally funded his account with $18,000 and reached a high of $70,000 during the first GameStop short squeeze. Instead of cashing out his life-changing amount of money, he decided to reinvest his chips into the casino that is meme stock options trading. He wanted to get in on rocket companies after its February short squeeze. Unfortunately, the stock failed to hold on to its gains and it drifted back down over the next few months. This caused his FDs to incur huge losses. While Microvision stock fared better than rocket companies during this time, he mistimed his FDs and lost thousands of dollars on his trades. Despite his gut-wrenching 3-month loss, this Wallstreetbets user is not giving up yet. He's going all in on BlackBerry Leaps expiring in January of next year. While Leaps are risky, they are considerably less risky than FDs, as they allow more time for the stock to go up. As a meme stock, BlackBerry trades somewhat in line with GameStop and AMC. It has increased more than 80% over the past few weeks, benefiting from the momentum of AMC. In fact, BlackBerry has actually surpassed AMC for the most daily mentions on Wallstreetbets as of June 7th. While the OP has a long way to go before making back his $20,000 loss, anything is possible. We wish you luck. The next investment fail we'll cover is of much greater magnitude. The AMC short squeeze has seen many Wallstreetbets users bag life-changing tendies. On the other side of the trade, there are short-selling hedge funds who collectively lost $4.5 billion in the 8 days leading up to June 3rd. During the first GameStop short squeeze, hedge funds lost almost $13 billion over the course of just a few days. The losses were heavily concentrated on Melvin Capital, which came within inches of bankruptcy and had to be bailed out by fellow hedge funds Citadel and Point72. After incurring such catastrophic losses, you would think the Hedgies would reevaluate their strategies of betting against meme stocks.
If fool me, we can't get fooled again.
Short sellers have actually doubled down on their short AMC positions. According to S3 Partners, AMC's short interest was around 90 million shares as of June 2nd. This is around double the level before the initial short squeeze in January. This has led to even more losses for the hedge funds.
Stop it. Get some help.
Even Interactive Brokers CEO Thomas Petterfy said that it's extremely dangerous to short any of the meme stocks, and he recommends against it. This is despite the fact that he thinks they are overvalued and will come back down to earth eventually.
The fact is that on the long term, stocks always approach their fundamental values, which in these cases is much, much lower. So while it is extremely tempting to short these stocks, but unless you have huge liquid resources, please try to resist the temptation because these prices can go to unimaginable heights before they settle down to a reasonable valuation, and you may have to cover on the high point, and if you do not have enough money to shoulder the margin calls.
Thomas, I might be offended, I think, if I were a Reddit trader or one of the. So you're saying you have sophisticated investors. They have more money than the average investor, I guess $250,000, but only 2% are playing in the meme arena. That sounds like you're saying that consists mostly of unsophisticated traders. Was that your intention to imply that?
Well, look, I mean, no, the shorts are certainly, I would think, are the more sophisticated ones than the longs. But look, I mean, eventually these stocks will go back to their value, which is roughly maybe single-digit dollars, if even that. And so on the long run, the longs will lose their money. So if while you may try to catch a sudden drift upward as a trader, I would recommend against being on these stocks.
All right, so.
Alright guys, that wraps it up for this video. If you like the content, make sure to smash that like button and subscribe for future videos. Also, check out our second channel, WSM Research, where we post DD on high growth stocks. In the meantime, thank you so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.